Hey guys, we're here with another reaction video with Mohnish Pabrai again. Now guys, if you're new to the channel, pretty much a year ago, it was early December last year, we flew to Austin to interview Mohnish Pabrai. When we got there, I asked a very simple question. Well, why'd you go to interview with us? And he said, I get a lot of interview requests, one a day on average. And I watched one of your guys' videos and I said, oh, these guys are actually value investors. So for those of you who come in with a little skepticism about YouTube, you should. YouTube's got a lot of people out there who have a channel. They got a lot of views. Everybody thinks they're an expert. They are not. But when one of Warren Buffett and Charlie Munger's personal friends tells us that we are the real deal, and that's why he could interview. And at the end of the interview, not on video, off camera, he said, you guys are doing God's work. Or was it on camera?
It was on camera.
Oh, it was on camera.
It was the very end of the interview.
Well, I think you guys are really doing God's work.
He said, you guys are doing God's work. Now, forget about God versus not, but the point is he very much values what we're discussing and what we're trying to do to teach the world about value investing. Now, if you don't like 25% returns a year or whatever Mohnish has gotten, if you don't like Munger and Buffett, that's not going to mean anything to you. But if you like those people, then he has given us a seal of approval. So please watch the video. We're going to watch this about Mohnish and his lecture on approaches to value investing. So let's take a look.
That unlike many other endeavors, like if you play basketball or cricket or something else, is that you can keep getting better at this throughout your life. So it's kind of an endeavor where continuous improvement and learning possible and actually desirable, which is wonderful. So what I wanted to actually kind of talk to you about today is that when we look at this large...
So first off, it's impressive what he's talking about. When we talk about athletes, I went to Laver Cup in London to watch Roger Federer retire. That guy is a month younger than me. And the thing he has dedicated his life to doing is over in a certain regard. Like he's not going to compete anymore. And I've heard about athletes who get depressed and sad when their careers come to an end.
Alex Rodriguez always said athletes die twice. Once when they stop playing their sport, and then when they actually die.
I always sit there. One of our friends is a former professional athlete in the NFL. And I said to him, I remember when he told me, he goes, listen, I remember driving home from Detroit Lions camp after I got cut. And I realized right then and there, and he said this quote, holy shit, football's over. And he was 30. I don't know what, 30.
Right.
And I sit there and say, like, imagine if somebody came to me and said, you cannot invest the rest of your life. I'd be like, are you serious? But that's what these guys, and that's what Mohnish is talking about. In investing, you can actually it's an endeavor in which you can get better and better and better as time goes on. In fact, time is on your side. I look at how much better investor I am today than I was last year, 5 years ago, 10 years ago, 15 years ago, 20 years ago. I'm so much better. I'm more comfortable in my own skin. So that's a very important thing that Mohnish is talking about.
Called value investing. It encapsulates quite a range of approaches and focuses one could have while trying to create wealth and generate good returns and so on. So for example, buying a dollar that is trading for 50 cents would be a great way to be a value investor. Focusing on spin-offs, which Joel Greenblatt wrote about, is another way. Focusing on cannibals, which is companies that are buying back their stock. Looking at what I call spawners, which is businesses that are really good at creating new businesses and then, spinning those off. So that's another way one can go. Focusing on multi-baggers is also well within the tent of value investing. One could do special situation investing, merger arbitrage. It's a long list of endeavors and initiatives. Ben Graham suggested net investing and so on. So
that's an important thing to point out.
What's
There's
that?
multiple ways to skin the cat.
Of course.
He just went through a bunch of different things that I'm like, yeah, I wouldn't do that. I'm not comfortable with that.
Yeah.
But
like which ones, Mo?
I mean, just going after multi-baggers, it's very difficult to do.
Oh, that's the one that actually appeals to me the most.
It appeals to me, but it's very difficult to make a living doing.
Really?
I think so.
I think there's less work in it once you find. Okay, so explain that further.
Well, going out and finding, let's use Palantir, for example. If you're going to find a bunch of Palantirs, there's a really good chance that maybe only one of them out of 10 work out, for example, just because they're so new. There's not a lot there. They don't have a lot of a track record going on.
So you don't think you can make a multi-bagger out of Google?
I
think you can. I think that
can, but it's probably not as likely.
So let's say hypothetically, so this is a good conversation to have. And guys, again, if you're new to the channel, Mo and I literally walk in the studio and our CEO, Tim, says, this is your topic today. And we put the cameras on, we put the mics on, and we just talk. We're not orchestrating this fake script. We actually have these conversations, and you'll see it in our video. So Mo, let's say hypothetically, Google is going to be around for 50 years.
Okay. And by the way, I want to add the caveat. I do think that something like Facebook that's so deeply undervalued, in my opinion, right now could be a big multi-bagger.
Okay, right. Yeah. So assuming you just pay fair value for Google, let's say Google you have worth $80. Okay. Assuming that, what should it make per year to justify $80 with long-term potential?
Oh.
$4?
Yeah.
Okay, that's high side 20 PE.
Sure.
So let's say it makes $4. Okay. Now let's fast forward 50 years. 50 freaking years.
A long time away.
What's an annualized growth rate for that earnings over a 50-year period? Considering the U.S. economy will probably grow anywhere between 2 and 5% a year, so call it 3.5 on average nominally. And then Google has a reinvestment rate. You don't include any dividends being paid out, et cetera. And don't include any stock buybacks.
Okay.
So give me. So obviously they're going to go faster than the U.S. economy.
Right.
Maybe not forever, but they're going to grow faster.
So the economy is growing at 3%.
Call it 3.5 overall.
Maybe double it. Maybe
So 7? Let's say hypothetically you're right. So 7% for 50 years. Okay. Now, what is 7% for 50 years? We're going to do that right here. And I think that's the point of when they say multi-baggers. Not necessarily
that. One's at
30 times growth, 117. So if you apply the exact same ratio of 117 times 30, you have a stock price of what? 35.10? Is that a multi-bagger?
Multi-bagger.
So that's what I mean when I sit there. I'm not, you're right, by the way, Palantir.
So I guess when I was thinking about it, I was just initially thinking multi-bagger, I go to those kind of companies. Yeah,
which is multi-baggers that you get in the next 3 to 5 years.
But then I put Facebook in my head and I was like, oh, wait a second here.
And by the way, I'm just talking about getting fair value.
Yes.
So let's say Google sells for a discount, it sells for $60 a share.
Right.
Theoretically, it's still gonna be worth $3,500 in 50 years. Right. You got a 60 bagger right there.
Right. Yep.
And that's the point that I'm trying to make. That what I'm trying to do with multi-bagging isn't trying to find the Tesla or now, do I want Palantir? Palantir is very interesting to me at a price not far from where we are today. And do I think that Palantir, if it hits its goals, could be an immense multi-bagger? Yes,
of course.
But that's going to be a multi-bagger a lot quicker than Google. You can still make Google, Apple, Microsoft multi-baggers. That doesn't include them buying back shares, paying out dividends. There's all these extra benefits you're going to get. And look at that going. That's the multi-bagger that Warren Buffett talks about, that Charlie Munger taught him about.
Good point.
And it's also the multi-bagger that I recently found out. There was a chapter in security analysis that was removed in 1962 where Ben Graham talks about growth investing and how important it is. Because as Mohnish said, Ben Graham was known for net nets. And Gary Mashuris, who we also have an interview with, said, everybody knows, Ben Graham for net nets, but it wasn't really about net nets. That was a small part of the book.
Yeah.
All right, so we've digressed a little bit, but the point is, I believe in the multi-bagger process for bigger companies. So let's continue on. We have about a minute and a half left.
Okay. Many different approaches one can take, which would all be within the tent of value investing. They say that you're old too soon and wise too late. And I've made investments over the last quarter century or more, which have covered.
I made a mistake. I knew what the mistake I made, guys. I said $117. I don't know why I multiplied by 30. It should be multiplied by 20. So that's $23.40. So it's still, when you bought I bought it for 80, it's still 30 times your money. That wasn't 40 times your money. It's actually, so I'm sitting here going like, wait a second, how did I go 30 times higher on the profit, but the stock went up 40 times higher? That makes no sense. And then I realized it right there. So right on air, I wasn't really paying attention to Mohnish. Sorry, Mohnish, but here you go.
Almost all of these different ways of looking at things, we also have things like PE of ones, things trading at low multiples or future PE of ones and that sort of thing as well. What I've been able to glean when I look at all of these different initiatives or different approaches that one can take is that across the globe, there are maybe 50,000 or 100,000 stocks in different markets around the world. And if one were to say that I only want to invest in companies that are trading at 1 or 2 times earnings, one can find those. One, cast the net wide and deep. One said, I only want to buy 50-cent dollars or 30-cent dollars or 20-cent dollars. You would find those as well. So pretty much, I think, because the universe of prospective businesses is so wide and so large, pretty much any criteria you set could work. I think the important thing is that one is very focused in what.
That's wonderful. That's wonderful. Yeah. Guys, figure out what makes sense to you and focus on it.
Don't deviate into what friends and family and this and that are saying.
Yes, correct. Yeah. I was at lunch just now with Mary, and we were talking about how I don't care what people think, but I care about what people think. Yeah. I said to her, if Warren Buffett came to me right now and said, Paul, crypto's the future, I'd be like, I'm still not buying it because I still don't get it. This is Warren Buffett, the best investor of all time. Now, does that mean I don't look for Warren Buffett for validation? Of course I do. But it's more like, hey, I'm interested in this. What does Warren Buffett think? But if Warren Buffett's interested in something that I'm not, I might sit there and say, what am I missing? Look at Verizon. I couldn't get for the life of me figure out what Warren Buffett liked in it. And I believe he's exited the position now.
He has. And it was funny. I can't remember who else we talked to. Was it Gary? Maybe it was Gary, and he said, I don't understand it either. Somebody we talked to, they were like, I don't get this either.
I don't remember.
I can't remember who it was.
But yeah, I was looking at Verizon. And you can look at our past videos of Verizon. I was like, I don't get why Warren Buffett, I literally say in the videos, I don't get why Warren Buffett likes this. Yeah. And I never bought it. But something like Alibaba that Charlie Munger likes, or Micron that Mohnish likes. Yeah. By the way, Mohnish liked Micron at a much higher price. And you and I were like, we don't get that price. Now we like it a lot more. And it's 63 right now, but it's getting, and by the way, 63 isn't even my take price yet. No. I'm interested in below 50. Yeah. So I'm writing puts at sub 50.
Right.
The point of all this being, guys, that Mohnish sits here and goes, listen, there's 50,000 or 100,000 stocks in this world. If you're willing to go out far enough, you will find the ones that make sense to you.
Right.
My sphere of stocks, though, is not very large. I want stocks that are so big that they're going nowhere, that I'm just waiting for mispricings in the market for me to be able to find and write cash covered put options against them and covered calls against them. That's how I'll get my really outsized returns. Because based on the globe of stocks I want to look at, I'd be lucky to beat the market by 3 or 4% just by themselves. Yeah. I've got to be able to figure out other ways to make money. Right. When Gary is buying stocks that he can make 6, 7, 8% above the market in returns with over time, right? Yep. So Mo, for you, like, do you like what I'm saying? Or
I'm more similar to you. I almost want to omit that first question that you always ask. Would I be surprised if this company was around in 10 years?
Because you're not going to look at it unless it's that way.
Exactly. So those are the type of companies that I look for. And I really want some good premiums on options because it's such a good income generator. And
so go ahead.
Go ahead. No, go ahead.
No, so we've talked about my basket of stocks, my money. So let's say, for example, my money is 100% up here. So I have 100% of my money. Mo and I have our own magic formula that we're investing in, and my plan is to call it 40% in there. So magic formula. And then individual stocks. I want to have, what was my ratio? I want to have another 30% in 15 to 20 very large cap stocks that I'm selling at good prices. Things like Microsoft, Google, the big companies that I like, Visa, American Express, Sherwin-Williams, things like that. I just have to wait for the right price. But then I want 10% in 20 or so Palantir type stocks. Now, these are companies I'm not going to be able to sell many options on. No, however, my goal is to make my desired annual return something insane. Like, I only want to buy them when it sees 15 to 20% annualized return.
And you can see incredible growth from those types of companies.
That's exactly it.
So like the Microsoft, Google, Sherwin-Williams.
Yeah, these ones are much more likely to become the fast multi-baggers. Yep. And then 20% of my money. So this is 20%. Am I doing the math right? No, 10%. Yeah, 10%. And then 20% of my money in cash secured puts. So I'm just going to sit cash there and sell puts against it for this basket of stocks that I like to just sit there and keep generating income. And if I get assigned those shares, wonderful. This makes sense to me. Is this ideal? I don't know.
Ideal for you.
Correct. it is ideal for me. And this works for me where I sit there. Remember I was struggling for a while, like, oh, what's my mix going to be? How am I going to invest? Now, once I came up with this, I was like, it feels completely at peace. Because I think I can beat the market on this between 2 and 4% a year. I think I beat the market on this one for between 2 and 3% a year. On this one, I'm hoping to get 5% beat per year. I don't know. And for this one, I want to generate about the market return. So let's even say it's only 8% a year. Okay. So I'm not even going to beat the market on this one.
And then on those two on the left, so the magic formula and individuals, that's including options.
No.
Okay. Oh, so that's even more then.
Yeah.
Because he'll be writing covered calls on both of them.
All of this. So that doesn't include the options. Now, I have to be patient. I have to be willing to be different. And that's where I'm at. And Mohnish will tell you, like, Mohnish and every great value investor will say, listen, the emotional acumen needed to be able to successfully beat the market is what's important. Like, Micron is down. Mohnish still has a lot of Micron. He's down
a lot.
Yeah. 33, 34, 40%, if not higher than he was before. Okay. You know, I was just looking at my portfolio before we came down here. I have some stocks that are up. And literally my first thought was, do I sell them? Because they're up. Like, you know what I mean? It's like, I don't know. So here's the chart on Micron.
Yeah, I mean, I'm just looking at Micron's high, which was January 4th, first day of the trading year, $98.45. And I can't remember the exact date, but I remember right after that, the 13F came out and he bought more. Somewhere in this 90 price range, maybe high 80s. So he saw something.
Yeah.
That I certainly don't see.
Now, do I see it at 50? Yeah.
Yes.
All right. So, guys, if you like this video, you'd like the way we're talking, we do 2 or 3 videos a day. We have a great community you can join. So subscribe to our channel. If you want to check out our software and our community from the other videos you watch, check out everythingmoney.com. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?